entrepreneurs. Today we talk to Sammie Ellard-King. If you want to up the gains, you want to listen to this podcast. That's the name of his company. He started a small group online with friends and family to talk about markets and investing, and it actually turned into a business for him. And we're able to take some advantage of that in this conversation where he shares some of his approach to education, changing relationships with money, and he also even gives a few stock picks. If you hang in the podcast and listen through the whole thing, I think you'll enjoy also the 3-bank system that he talks to his clients about. Here's Sammie Ellard-King.
Sammie, welcome to the Entrepreneurs Unite podcast. We're talking to you today from across the pond. You're over in London. We're over here in the United States, and excited to learn a little bit more about Up the Gains. The subtitle of that is Money Made Simple. I think everybody would love for money to be made simple today, and in this age. And certainly, I'm sure there's a lot of different economic things going on in the world. Where in your side, on our side, globally, there's a lot of things going on. A lot of people are concerned about personal finance, business finance. There's just a lot of stuff going on. So tell me a little bit more. I guess first off, we'll dive down into maybe a little bit more of your background. But if we start with Up the Gains, tell me a little bit more about Up the Gains and what you guys are doing.
Yeah, cool. Thanks for having me, guys. So Up the Gains really came about as initially as a passion project. Really, I've been investing for many years and helping friends and family along the way. And then during the pandemic, with basically half the world furloughed, sitting around, I set up a WhatsApp group because a few friends of mine had referred their friends. And so I was like, hey, let me put it in one place. And then within 3 months, it had grown to 246 people, which was the limit that you could put in a WhatsApp group. And I was like, hang on a second, there's a business here. And so I kind of got the idea going and cracking. And basically what I wanted to do, I was being asked all different types of questions from beginners levels right up to sort of intermediate investors. And I wanted to give them a place where they could go and learn, because the feedback that I was getting from them, that there's so many fantastic websites out there, that talk about these things, but often they talk about these things in a way that's not necessarily, from the people as such. It can be quite condescending and quite high powered in a way, in a lot of the ways that they talk about these things, and laden with jargon. So we take that right out of the frame. We talk to them in a fun, easy, accessible way. And it's been resonating really well. So that's kind of the overview. We focus on investing as kind of 70% of what we do, but then we really look at the personal finance spectrum as a whole and talk about budgeting, saving, and money making, passive income as well for the people that are interested in that. There's a big trend in that since the pandemic. So that's kind of where it's come from. And that's okay. A little overview.
No, I appreciate the quick little intro, and there's a lot to dive in here. So, you mentioned, information overload in a certain extent. And, I think what's happening today, I'd be curious to your take, but I think this is the genesis of why your model was so important and worked so well in the WhatsApp group, is it's one thing to open up my news app on my phone and get fed, quite frankly, a bunch of garbage. Because depending on who wrote it, who paid for it to be written, what their biases are, if I just buy into whatever's fed to me on whatever TV channel or news outlet I'm looking at, I'm buying into a certain narrative that has money behind it, that's pushing a certain agenda, versus if I'm in a WhatsApp group, a Slack group, certainly there's other types of platforms right now that are being used at very high velocities, Discord as an example. You're talking with peers that are experiencing different products, but you still get potentially, if you're joining a group you don't really know, you're still getting a lot of shilling of, hey, we should do this together. We should, this project's really great. And you don't know about the project. You get hyped into it. You go buy the project. You think it's all great, but you just got shilled into a project that then goes to nothing. So there's just, maybe I'm talking a little bit too much about crypto right now, but there's there's too much information. There's too much stuff going on. How do you help people navigate those waters?
That's a really good question. That goes right into the nuts and bolts of what we do. We really take that away from it. We are not the type of platform that come on and, buy Bitcoin, buy Luna, or whatever that might well be, that new crypto coin. We don't do that at all. We really try to build them from the ground up. We take them on a long-term approach. So one of the things that we look at is, we encourage people to read the media because it's important to know what's going on within the industries that you're investing in. However, exactly what you said, we live in a clickbait society. The stock market is probably one of the easiest ways to get you to click onto that, because if you're constantly hearing the narrative of stock market's going to crash tomorrow, you sell and then you've lost your money, or you've potentially sold and then the market jumps up 15-20% from there and you've lost a lot of profit, right? So I think it's really important to take in what you read from the media with a pinch of salt. As I was saying before, it's important to know that Tesla are bringing a newer car out, or that T-Mobile or expanding 5G or whatever that might well be, that because you own those products, and that's good for you to know, because you want to continually hold them. Or if they're doing a really bad earnings report and you see something you don't like, there's something in there you want to take away, right? So you might sell, and that is something you read. However, the main context of that article could be that Tesla's going to burn and crash, and Elon Musk is going to jail, and all of this stuff. And that's not what you want to take from that article. It's probably the one line of text that was buried at the bottom, right? So that's what we do. We tell our guys not to think about the media, think long term, set yourself time horizon goals. Most of our readers are in their 30s, so they've got 40 years ahead of them. Some of them want to retire early, so they're more aggressive, but we teach them to really budget and create habit. For me, a lot of our readers are low income in a lot of ways as well, so we teach them about saving and budgeting and using a system we call the 3-bank system and creating a habit. So we tell our readers basically to open a second current account than the one they have, and take their credit card, their debit card, cash card to a monumental location, something that means somewhere that means something to them. That can be their back garden, or up a hill somewhere that they really like going walking with their dog, and then take the pair of scissors with you and cut that card in half. So it's like a moment that they do, and they're like, and it drills it into their head. They're like, oh, okay, now I've made that decision. Like, we want them to have no access to that savings account other than the money that they direct debit into that account each month. And that just creates a little bit of habit, because that was that one spark. Like, I believe in the brain neurons changing. So you need to hit them with right, you can do this. You can change your relationship with money. And we found that people just love it. They're sending us photos of the most random places that they're cutting their cards up, but we're all for it. It's cool, it gets people involved. So that's what we want.
I love that. I love that concept. So there's a lot here, but when I hear clickbait and I hear change your relationship with money and taking a long-term approach and everything else, so I'm guessing that a lot of what you're really doing is a mixture of education and psychology. Investing is it tests your psychology, right? It tests your ability to not get too emotionally involved on what you're reading, as you mentioned, make that a pinch of salt. So would that be correct, that Up the Gains is an education, but also teaching about the psychology of money and relationship with money, so you know how to react?
Correct. Yeah. Education first. I think that's like the first port of call. We have a whole section dedicated to beginners where you can learn from literally what is a stock right up to, basic investment strategies, etc. So we really try and take them on a journey. It really depends. Some people come in and drop in and because they just want to learn about what a REIT fund is, or how often dividends pay, for example. They're perhaps more experienced investors that don't necessarily know about a certain topic within that, because let's face it, investing is huge. There's thousands and thousands of topics, thousands of strategies, so we can never cover them all, but we try to. You can come and get that overview of what you need. But yeah, that's kind of really, we are education, and I think that's really important first. I encourage people not to invest unless they have some basic knowledge of the markets, at least, because so many times you see this, people they come in when the markets are hot, and everybody runs away when the markets are down, right? So, but the guys that come in when it's super hot just go, yeah, why can't I buy Tesla? Why can't I buy Bitcoin? And we're like, look, that's fine. Buy Tesla and Bitcoin, but don't put all of your money in once. Say you got £1,000, split that over 10 months, put £100 in each month, dollar cost average into the market, and you'll be a lot safer. Plus, you'd have bought at many price points. Your risk is lower, and you probably, we're in a bear market right now, but you would have made money, and that's what we teach people. So,
Sammie, with the 70% of your business that's on the investing side, are you having some of your clients invest in the U.S. market?
Very much so. So one of the main things we teach people is to invest in the Vanguard Total Stock Market Index, which is the top 5,000 stocks in the US. I mean, we balance our portfolio. We are open about our portfolio as well. We post it online. My holdings are 65% US, and they always will be. I see the US as the main driver of economic growth across the world, really. So for me, I think that it's really important that you have a diverse portfolio. So that will be US, UK, some Latin America, some Asia, if required, some Europe. I think it's important to have everything. And obviously the right investments within those. But yes, to answer your question, it definitely, the US is very important.
Yeah, it makes sense. We just had a guest named Bruce Fenton on the podcast, and he's running for the U.S. Senate, and he's running for New Jersey. And he had talked a bit about some of the devaluation of currency, the printing of money that's going on in the United States, and some of the concerns around that, and even that there may be a shift in the dollar potentially at some point not being the reserve currency internationally. So I'm curious as to your take on some of those topics.
Oh, that's a very, very broad and deep question there. Yes, I am definitely worried right now. If you look at, I think it's 82% of the whole amount of GDP ever printed was in the last 18 months, which is insane. When you think about it, we're not far behind you in the UK. We had furlough. We are higher in debt than we were in World War II. When you look at the ratio of it, obviously the amounts are different but when you look at inflation factored into that, we're at a similar way as you. So I do think there's going to be a lot of headwinds. Actually, I think it's been made worse by the US's policy against Russia from Ukraine. I think Biden's got that wrong. And you can see by the Russian ruble is stronger than it's ever been. And it's clear that that's wrong. But there are a lot of worries about where we are and how much money has been spent and how that's going to be paid back. I can see a lot of it in the UK right now. I'm sure it's the same where you guys are as well. The oil prices are through the roof. The government are basically earning back the money that they gave to us through fuel right now. That's the best way of putting it. When you look at the levy tax here in the UK, the price of a litre of fuel here is £1.92. It's the highest it's ever been. But actually the cost of that is around about 32 pence. So the rest is tax. So you can see how high that is, right? And I think that is a really, really interesting way of them taking on their money back, basically. So yeah, it's a broad topic. It's a very, very broad topic. I really do believe that we're going to be facing another couple of years of real hardship, economic hardship. But there's certainly, for me, is a recession on the cards for both the US and the UK. Definitely for Europe. I believe Europe is already nearly in it. And so, yeah, it's troubling times. But this is what we say to people, there's cycles. This has happened before. Inflation's been this high. They've printed money before. They've done this before. Perhaps not on this scale, but they've done it before. And yes, it took sort of in the 70s, 9 years to come back out of it, but they did come back out of it. So if your time horizon with investment is 15, 20 years, you're going to be okay. I do worry for the people that are retiring soon. They perhaps are in a pretty sticky situation and deciding what they're going to do with their portfolios and whether they draw those down or not. But I think it's a crazy time right now, right?
What country are you in, Sammie?
I'm London, UK.
Okay, so we don't often talk politics. I don't know that we've ever talked politics, and we're on almost episode 100. And one of the reasons I think we've stayed away from it is everybody has an opinion, and very few people want to hear each other's opinion. And all they want to do is a lot of talking and very little listening, and it's very polarized, and we've just kind of stayed away from it. You present an interesting and unique opportunity because for you to say, hey, I think Biden has it wrong, somehow I would attribute to you being more unbiased than the average American who would tell us, hey, I think Biden has it wrong. I would never ask a follow-up question unless you were out of the country. I have a follow-up question. So from someone who you don't really care if Biden has it right or Biden has it wrong, it's not about Biden, it's not about Republican, Democrat, you don't really care. So from your really unbiased perspective, you're going, I think Biden has it wrong as it relates to Russia. What do you feel is wrong about the current policy, and what would be right?
Wow. We are going deep. So you've placed sanctions on a country that can still sell their product. I don't believe that Russia is ever going to be forced not to sell oil to the rest of the world. It's just not going to happen. So you've got that wrong, because there's ways around that for Russia at all points, and it's proven in the currency. So I think he's just got that wrong. He's gone heavy. He's criticized them. He's offering arms openly in the press to Ukraine. He's fracturing that relationship possibly forever. And they're the biggest suppliers of some of the stuff that we need. Semiconductors, use some of the metals that's found in Russia. Ukraine, obviously, is a massive farmland country, provides a lot of grain and wheat to the rest of Europe and the rest of the world. And you are cutting that off without a solution. So yes, we need to move into green energy and move away from oil, and hopefully this will accelerate that process. But we are nowhere near that process yet. That's 10 years down the line. But you've basically gone and turned the light off without having anything else to turn to back up. There's no backup generator. And I feel that that's been a big, big, big mistake. And one that I do think, if the stock market continues to drop like it has been, it's been 6 months now of drops. And I do think American business will eventually say, hey, we've had enough now. What's going on? And I think he's going to back down. I really do. I think he'll have to back down. And I think there's going to have to be negotiations on the table. And I think there's going to have to be negotiations pretty soon, because this isn't looking like he wants it to look. And yeah, I think he's got it very, very, very wrong. But that's
so. Well, I understand that there are an innumerable amount of factors at play, and we can't possibly know them all. I want to validate, I think, what I just heard, which is placing sanctions on Russia. They're not going to eat those themselves. So they're going to raise the price of the oil they sell. We still need their oil. So now we're going to buy back at a higher price. Therefore, we're kind of paying for our own sanctions, and which is going to create a shortage of money, which is propagating printing more money. Printing more money may devalue the currency. And it's like, wait a minute, how do these sanctions make sense? I think as I think through some of the conversation with Bruce Fenton and some of the things you just said, is that a piece of the pie anyway that you just said?
You've hit the nail on the head. Exactly right. Yeah. What they're doing is causing a domino effect, which is essentially hurting themselves at the end of the day. And the UK are a factor in that too. We've been heavy on sanctions on Russia. We've expelled ton of oligarchs which were actually helping our economy. So it's only a matter of time before they back down.
So what do you believe are what is the underlying financial strength or weakness of the US market today? Do you believe businesses are generally thriving? They're thriving more than what the market is kind of ebbing and flowing based on all the things going on. And there's real financial strength in the businesses that's not showing up necessarily in the markets. Or do you believe it's actually weaker and the markets haven't reflected ultimately the weakness that there is in the businesses?
It's a really great question. I believe there's going to be some winners from this. I do believe there will be some losers. When you have a look at, how retail is holding up and actually is performing very well, and the CPI data as well, like construction is on the rise. It's not an economy that's failing. It's an economy that is suffering from macroeconomic policy. So for me, I believe, yes, there are going to be some casualties along the way, but American business is strong. I think so. You just have to look at the earnings report. You've got some of the biggest companies in the world doing 20-30% revenue year-on-year growth, which is insane when you're talking about hundreds of billions of pounds here. So I don't think that the American economy is going to fail. I don't think it's struggling. I do believe that we're in a little bit of a let's figure out what's going on phase before we can make that step forward. And yeah, I do believe with this high inflation that we are experiencing all over the world, that there are going to be some big casualties, ones that we wouldn't expect. But you just go back 50 years and look at who were the winners in the stock market back then, and most of those companies aren't around anymore. And that just goes to show, right? The business cycle is one that happens to, and it really does almost always ebb and flow with the stock market. So I think that's my opinion on that. I think American business is strong in the long term.
So I want to jump into this real quick because I don't know if you guys have ever heard of the All In podcast.
Yeah.
With Shamat. So basically, Rich, have you ever heard of it? All In
No.
podcast. It's more of a YouTube podcast, but I think they go other places as well. And it's basically 4 billionaires, US-based billionaires, that come on and really talk about very large macroeconomic issues that are going on in the world. And it's so informative. It's fantastic. And one of the things they said today, Sammie, on the podcast, it was Shamat who said it, is he said the government, you think about macroeconomic policy, printed around $3 trillion worth of dollars, right? US dollars. Well, coincidentally, since the bottom of the market has increased almost $3 trillion.
Yeah. And
so now they're adding this quantitative tightening and increasing interest rates for the whole purpose of sucking that $3 trillion back into the government. Right.
It's nuts.
And so what's going to happen, Sammie, right? If I'm not mistaken, is the market is going to have to give probably $3 trillion back. And that's why a recession is almost inevitable at this particular point, because they need to draw this back and pull it out. So if you pump the market with $3 trillion, market goes up $3 trillion. Well, now you want to tighten it back out. That maybe it's $2 trillion, and it needs to come back out, right?
Yeah, 100%. You're so right. Yeah, I completely see where you're coming from, and I believe it will happen in ways that we don't really foresee now. It's always the way, but alongside that, the companies are still growing within that. So yes, it's giving back $3 trillion, but it won't give back $3 trillion because those companies will grow to match some of that. So yes, I don't believe we're near a bottom yet. I do believe we've got a tricky 6 to 12 months ahead of us. But I don't believe that should be stopping anyone from starting investing or continually investing, because it's just all part of a game in the long run. The stock market is set up to go up, so eventually it will.
Well, let's talk about that. Let's get to some real practical components here, right? From Up the Gains. So, certainly, and I think you may have mentioned this as well, some of the biggest economic opportunities we may ever find maybe in the next 12 months or 18 months So there's an incredible opportunity for people to learn that everything goes in cycles, and nobody should panic. But what do you recommend if there was like 5 things or whatever? What would you recommend people do right now, knowing that this is going to happen? How should they properly structure themselves to protect, but also take an opportunistic view of what's going to happen?
Yeah, that's a good question. I think diversity is key. I have some high growth stocks within my portfolio. I'm more aggressive with that because I want to retire earlier than guys that are happy just to sort of invest in straight ETFs or bonds, for example. But within that, my portfolio, I have energy, I have Procter and Gamble, I have Johnson and Johnson. These are like staple companies. Because if we go into a recession, right? I found this basically. I was thinking about this the other day, and I actually wrote about this in a post recently about the volatile stock market. And in a recession, you might not buy those Bose speakers that you had your eye on, but you will always buy shampoo. Like every single day, you're going to need to wash your hair, right? You're going to need to have soap. You're going to need to have toothpaste. These household items that we use every single year, and these companies rise 3-4% every single year. They're great companies to hold within a recession because you're still going to need those household products. The high ticket, high value items, they're going to take a hit. But eventually, when everything sort of evens out again, suddenly these guys are going to go on another run. So I do think it's about balance within your portfolio. I think that's really important. Definitely don't go all in on crypto or Tesla or Apple or even Amazon. These guys, holding all of those guys alongside some staple companies, alongside some crypto, you're then diversified. I think a minimum of 25 to 35 holdings within your portfolio, if that's individual stocks we're looking at. And then I always encourage people. So for example, I split my investments. So in my SIP, I have just ETFs or index trackers, because that money, I'm not allowed to touch it till I'm 65 years old. So, that's the way I see it. And then my stocks and shares ISA, I'm way more aggressive and I have individual pickings within that because I want to take some risk with that money. But when I get paid, the money that I know goes into my investing gets split down the middle and I half it between each one. So they're both growing. But you can see that kind of level of diversification for me, obviously that's after a good 8-9 years of investing. That's how I deal with it. But if you're starting out, just go for some good solid index fund trackers. You can't go wrong. And equally as well, if you just want to become an investor but you don't really want to learn the markets, just buy index funds. Like you don't need to do anything else. Just leave it and put in there every single month, and over time you're going to earn some really good money and probably actually beat the lows of the guys that are doing individual stock picking. So this is the way that it is. It's just it's all about long term. But
Yeah, Rich, I had heard something recently too, and I think you've mentioned this a couple of times. Right now, just go in every month, be consistent, right, and go into some simple ideas. You mentioned earlier dollar cost averaging. Rich, one of the funny terms that I heard recently was, a lot of people try and pick the bottom, but if you go pick the bottom, you're likely to get your hands full of crap. So don't try to pick the bottom, just dollar cost average. And I don't know, Rich, I mean, if you have any thoughts on this, but the times that I've ever tried to jump in too aggressively, whether it be on one side or it's too high or it's too low or whatever, I always come back and I always look back and go, I should have just dollar cost averaged.
Yeah.
Well, I'll tell you what, I got it wrong when I tried to time things last, because it was maybe, I don't know, a week or two before Trump got elected. And it was apparent that he, the way he went about things, he wasn't making friends while he was doing it. You could debate that he made good decisions or bad decisions for America, but no one can debate that he wasn't a very nice person or very likable to many people while he was at it. That was apparent before he got elected. And I'm sitting there thinking, this is going to be a problem. I'm going to be smart. So I moved half of my 401k actually over to cash and bonds. Well, sure enough, what ended up happening? He got elected. The market went up. I never put money back in because I'm like, I don't know, what comes up must come down. What goes down must come up. And I actually just got lucky because I called it wrong, obviously. I just got lucky. And not to say the coronavirus was luck by any stretch for anybody, but I got lucky in my investment that the coronavirus knocked the market down so far. Yeah. And I actually was able to buy back in lower than what I had sold at years previously. So wow. I feel like I learned a lesson there about, I might not be quite as clever as I thought I was. And I just got lucky that I didn't take a huge hit as a result. And I'm back, John, and committed to dollar cost averaging.
You got lucky there. If the coronavirus hadn't happened, then you might have been sitting there now thinking, God, what am I going to do? Should I just come in? And it's constant battle.
Everybody we talk to, Sammie, everybody, my neighbors, people at work, people we have on the podcast, everybody seems to be pretty confident. We haven't hit the bottom yet. There's a possibility, if not the probability, maybe of a recession. We'll see. Why doesn't it make sense then to go, let's sell. Let's be smart. Why don't we do that when everyone seems to be saying the same thing? Is that because and here's the only thing, I don't mean to answer the question I just asked, but I've also learned conventional wisdom is that you have to do the opposite of what everyone thinks, because that's usually what the market does. So does that make it like, okay, everybody thinks it's going to go down, so now I should actually buy because everybody thinks it's going to, like, I don't even know what to do other than just throw my hands up in the air, keep doing what I do in dollar cost average. What should I be doing, Sammie? Everybody's saying this thing's going to go down.
Yeah, well, just look at Warren Buffett, right? Guy is an absolute genius at what he does, but he does one thing: he just waits, and then he picks the right opportunities in companies that have strong fundamentals, and that's all he does. And and look at how good Berkshire is, So just do that. It's really that simple. You could, of course, you're totally right. You could have sat there right now, and if you'd have picked the top and you'd have, invested in the VIX, you'd have probably made quite a good bit of money. But did you know what was going to happen tomorrow? Did you know Russia were going to go to war with Ukraine? Did you know we were going to try and put the squeeze on them and fail? Who knew? So if none of that had happened and the confidence had restored and suddenly the market bounces up 5-10%, which could easily happen. We've seen how volatile it is right now. And you lost a bunch of money. So don't do it. If you buy in dollar cost average like you're doing, and buy in companies with these great fundamentals that are consistent businesses that just are just rocking it year on year, they just hit it. They know what they're doing. They're expanding. They bring out new products. They pay dividends. They value their shareholders. You're going to be okay with these businesses. So, yeah, I think you're right. You could make a hell of a lot of money doing these things, but I'm not willing to do that.
So I heard you say index funds. Yeah. Got it. Can you give John and me and our listeners, what are a couple of ticker symbols that we should be looking up if we're looking at index funds?
Good question. I'm actually going to talk to you about something completely different. I think it's very, very interesting. It's one thing that I've been reading. I invest in a company, in an investment trust in the UK called Temple Bar. So they are a UK-based holding. They basically are a value. They focus on value investing. One of the things that is Nick Lance is the Ian Lance, sorry, is the portfolio manager there. The UK right now is the most undervalued in terms of market relevance as it has been since 1950, which I find absolutely mind-blowing. When you look at the valuations of some of these companies, and we've had a really tough ride for the last 10 years, since basically we announced Brexit, and Theresa May, and this whole Boris Johnson thing that's just going on. We've had a really tough ride. And these businesses have been growing and growing and growing and growing, and the stock price has been beaten down and beaten down and beaten down for years and years and years. So I think right now the UK is one of the most undervalued markets in the entire world. And that's why I have roughly today about 11% of my entire portfolio is with Temple Bar. They focus on very heavy on energy. They have BP, Shell, but they have some stores like Currys. They have Royal Mail, which is our kind of national post system here. And these companies are hugely undervalued. They are basically, the market is discounting some of their revenue, in some cases by 50, 60%. And it is mind-blowing. So I really would encourage any of you guys, go and check out Temple Bar and read a couple of their white papers that they've put out. They're not long and they're pretty interesting to read as well. And you will see what they're saying, and it's very hard to not believe it because it's right there in front of you. So yeah, go check those guys out.
Love that. I appreciate that feedback. And Temple Bar, is it TEMPLEBAR?
So yeah, like Temple, like Temple of Doom, and then Bar as BARR.
Perfect. Okay, great. I'll definitely take a look at that. It's funny how no matter whatever happens, we always come back to Warren Buffett. It seems to me like 100 years from now, they'd be like, we should just do it like Warren Buffett did. Everybody, in the .com era came, he's like, I'm not touching this stuff. Sure enough, it all crashed right in 2000. And he's like, see, I told you should just buy toothpaste. Whatever. And crypto comes along, he's like, don't worry about that, just buy toothpaste. And recession's coming around now, we're like, oh my gosh, go buy Procter and Gamble and J&J, right? Just do it like he did. We all try and be smarter than the market, and it just doesn't work. It's very hard to be smarter than the market.
But otherwise, it's no fun. It's no fun otherwise. Come on, like we have to.
No, you're right. We try and create so much fun that we're okay losing money doing it.
John, it literally reminds me of you and me at a casino. Like, are we going into we've had this conversation before when we go into a casino, right?
Yeah.
Are we going in to win? Or are we going in to have fun? Yes, of course, winning is fun, but playing the game can be fun, except if you're in it to play the game, you're generally going to be in it too long and you're going to lose. I mean, we do that at the casino if we're in it to have fun, and I find the same thing happens in the stock market.
Yeah, I love that. Sammie, you mentioned something earlier. We never really got to it. I wrote it down and I kind of left it as an open item, but you said you should have a 3-bank system.
Yeah.
I assume by cutting up the debit card on the savings account, that the savings account is one of them. What are the 3?
Emergency fund.
Okay.
So your current account is your checking account you use on a daily basis. Your savings account is something you're aspiring, for me, is it what you're aspiring to get? I mean, we're not talking about investments here. This is for people that physically can't actually handle money. They live paycheck to paycheck and have debt, right? So often we use this system with them to get them out of debt or to stop them spending everything that they earn, basically. Okay. So that's what we do. So the emergency fund, we tend to use a lot of digital systems these days. So that can be, the third bank can be, say, a pot, I think. Do you guys have Monzo in the US, or is it SoFi over there? SoFi Stadium, you guys have got that.
Yes, SoFi Stadium.
So they do it. So SoFi, for example, you spend on your credit card or your debit card, and you spend 80 cents. It rounds it up to $1, and that money goes into a pot. And that we tend to say keep that as your emergency fund, and then your other account, your savings account, is what you're aspiring to get. So whether that be, a new car, a holiday for the family and kids, repairing that roof that's falling down, I don't know, whatever it is you need, and that's what we try to do. And then once they kind of got that going and they've done that for sort of, at least 12 months, then we would introduce them to investing. And we tend to do that for those types of individuals, we tend to do that with roundup apps or robo advisors, which is just, it automatically goes into their their investment accounts for them. They don't get involved in individual stock picking. Generally, these individuals don't normally have a great relationship with money that we're trying to change. So yeah, that's
so are the three, you've got your working account, that might be your checking account that you're kind of paying your as you go throughout life over the course of a normal month. You've got your saving for something account that
Correct.
You're going to spend it and you're saving for something. And then the third one is emergency, that you don't touch it unless you absolutely need it.
Correct. Exactly right. Yeah. The thing is really important to separate that.
And we have something similar, I think, to what you were saying. We have Roundup or Save the Change or stuff like that.
Exactly. It's the same philosophy as like you used to walk into the house with a, jangling pocket full of change, and you put all of the change that was decent into the pot and it grows, right? And you can't get into the pot, so you'd have to smash it to get into it. It's the same philosophy but digitized. So there's no point doing that with people, like put £1 in the pot, put £1 in the pot. It doesn't work like that anymore. So we do it like this with them, and we encourage them not to have access to it. So that's really important. The app on their phone, do not download it. Do not sign up to internet banking. Do not sign up to telephone banking. Physically have to go into branch. So if you break that barrier with them, so they have to make that trip. Some people, for me, I have to drive 15 minutes to my local branch. That's a long way to go, thinking, do I actually need that money? And by breaking, but if I open the app on my phone, I can make that decision in less than 0.5 seconds, and I've transferred the money out, and then I've probably spent it. So technology is fantastic in so many ways, but for people to save money, that have a tough relationship with it, it's really, really bad. So yeah, we have to break that chain.
You had said index funds. When I asked about that, you had said Temple Bar. You had said then companies with great fundamentals. I am not asking you to have a crystal ball. I am asking you for an ounce of value that you might typically reserve for clients that you can offer our listeners to go, what are a few companies that have great fundamentals as you see it today?
Oh, you can take some staples out there. I think Microsoft is probably one of the biggest businesses for me. They're absolutely nailing it. Satya Nadella as CEO is just absolutely crushing it right now. I think it's one of the best businesses out there that is on discount for you to go and buy today and hold it. They're killing it. That's an example of a company with great fundamentals. They have invested in innovation. Their R&D department has brought new products to light, which are killing it. Their cloud revenue is growing. So they have multiple revenue streams which are bringing forward the business. Even their personal computing, which is the worst name ever for a unit, is going up 14%. Microsoft. So you wouldn't think that when you just think everywhere you look, everyone has an Apple, Mac, or an iPhone, right? But it's growing. So they're doing it right, and I just think that it's an example of a business which is just killing it. So that's one. Another one, slightly left field. Let's have a think. I love Upstart, which is a AI lending platform in the US. It's fantastic business. Former Google, I think he was head of digital product, went on to found this company. It's an AI lending solution for personal loans. They've gone into automotive now as well. But this is a company growing nearly 100% year on year. I think they had 126% on their most recent earnings call. But it's a company that's dropped nearly 70% from its all-time high. So if you're looking for a business that's growing exponentially, and also their margin is nearly 80%. So they're killing it. Those fundamentals are probably one of the best you'll see in the business right now. But they're getting crushed left, right, and center because the rest of the market's pulling them down. So I look at companies that are growing their revenue, but they're also growing their bottom line as well, and that's really, really important. That's got to be going up and up and up and up and up. there's companies like Amazon who actually made a loss for the first time in forever, right? Their last quarter, that was nuts because they spent too much money on Rivian, which, yeah, you guys have to tell me that one. I don't know. I've never seen a Rivian car. Is it any good, or
haven't seen them yet either?
Who knows, right? Such a weird investment, but they wanted to become Tesla as well, right? They wanted to try and swallow up that side of the market, and you get it, right? They're going into everything they can possibly get their hands on. Something was going to lose, but that's a company again growing in so many realms, but is struggling in other areas. So fundamentally, is it a good business? Yes, it is a good business, but it's having some troubles right now. So there's so many aspects to this, but yeah, that's how I would sort of start, by just look for growth and look for growth in the right areas.
Thanks for that.
So Sammie, talk to me a little bit more about Up the Gains. What does the business do specifically? So if our audience wants to learn more and follow what you're doing, what would you suggest?
I would just drop onto the website. I would come say hi from there. We have different categories available to you. We encourage, as we're saying, if you don't want to necessarily learn about investing, but you want to learn about something, something that's going to make you money online, a new passive income stream, you can come and check that out. There's so many different aspects to the business. So come on there, see where the website takes you. There's lots of cool stuff on there. We have an ebook available as well if people want to come and check that out. So dedicated to beginners, called How to Go About Investing Money. So that's a good place to start. Kind of talks about my story, where I came from sort of £20,000 in debt right through to where I am today. So we talk about that and how I did that. So it's a really good place for people to start. And yeah, we're on socials, Up the Gains Money, and all that jazz. Is the same, Twitter, Instagram, we're there.
Okay, sounds good. And for those who want to follow it, it's not upthegains.com, it's upthegains.co.uk for the website. If you want to go visit that, please go visit it. Sammie, thanks for joining us today. And it'd be really interesting maybe to have this episode again in 18 months and see what happened based on all these conversations, because I think it's going to be a very, very interesting next couple of years. So hopefully we'll be able to do that together.
Definitely. Either I'll be extremely sheepish or going, yeah, I got it right.
Exactly. All right. Thank you very much.
Thank you.
Guys.
Please stick around for a few more minutes while Rich and I break down this episode.
Rich, I love the fact that you jumped right into the opportunity of having a non-U.S. citizen talk about a different perspective than what we hear in the media. I thought that was a fantastic opportunity to have that conversation. So thanks for doing that. And I'd love to get your perspective on that, not from a political standpoint, but just on the perspective of there's different perspectives.
Frankly, maybe turn too much of a deaf ear to politics generally. But as I said when we were recording with him, I just don't find people want to have constructive discourse. Yeah. I find people want to monologue and be convincing of why their way is the right way. I generally, whether it be on TV or casual conversation, I generally find people seeking truth is not happening when it comes to political conversation. People wanting to justify why the way they feel is the right way. And I just don't want to be part of the conversation. It frankly confuses me. It can get me frustrated. But to hear from him where it's like, what does he care? Biden, yes, Biden, no. What does he care? And he had such an independent view of it that I couldn't help but go, so what are we doing wrong?
Yeah. No, I love that. And, whether it's politics, money, religion, and a bunch of other categories, probably, I think you and I tend to potentially be more listeners than pushers of our thought process. And you should do this, or you should subscribe to this religion, and here's why. It's like, hey, we more will listen to the agenda. But you're right, there is a lack of discourse. So I really appreciate you opening that conversation up. And
by the way, I would say there are plenty of things you and I are talkers on. There are plenty of topics you and I have a strong, very educated opinion on. that, I mean, heck, even with the podcast, we have listeners, right? But when it comes to your point, when it comes to like politics and religion, and it's like, I want to hear other people's opinion, but then when other people start debating with each other, and there's a total lack of listening that can digress into a lack of respect, like I just don't want to be part of it.
Well, that kind of fits into something we talked about in this conversation. The clickbait and the media and the positions around money and the economy and the recession. You pointed out very well, when there's max fear in the market, now is the time to invest because everybody else is pulling out. So what's going on here? And it is interesting. And that's why, you had asked before, like, should we just get out of the market because everybody's saying there's going to be a recession? Well, that's probably the worst thing you can do because most people are probably wrong. And that's where dollar cost averaging, just being consistent, diversification that Sammie talked about, key, right? Dollar cost averaging, just consistent, just like we show up consistently with our podcast, showing up consistently and having a formula where X% is in a savings account, maybe X% is into your investing account, and then you diversify that X% of your investing account into 25 different potential, outlets, whatever those may be, whether it be stocks or funds or, crypto or whatever it may be that suits your fancy. But, just showing up and diversifying is really important if you want to have a long-term view of the market.
Agreed. I really appreciated him being rather direct when I asked him, so index funds, like what are a couple ticker symbols? And he shared with us about Temple Bar. And, what are some companies that have great fundamentals? By the way, I'd never heard of Temple Bar. Sounds like you hadn't either. No. And he talked about Upstart. Had you heard of Upstart before?
It sounds familiar, but I can't say that I know about it. No.
Never heard of it. AI lending for personal loans, and now they're getting into vehicles. Like, he has an opinion. It's an informed opinion, and he wasn't afraid to share it. And who knows? Is he right about Temple Bar, Microsoft, and Upstart? Oh, who knows? Nobody has a crystal ball. But I love how he was willing to put his flag in the ground and offer that value to us and our listeners.
Yeah, no, I love that. And I love the way he started too, Rich. I don't know if you're part of any chat group, let's put it this way. When you talk about WhatsApp or you talk about Slack, Discord, all these different channels that are out there, Telegram's another one. Are you part of any of those groups, any of those chat groups, communities?
I was when GameStop was going up, and I'm like, oh, what's going on with GameStop?
So Reddit?
Yeah, really not on a regular basis.
Yeah, I find those to be absolutely fascinating. I don't know if it's my age, but I've always felt like I'm big into technology. I've always stayed advanced, but I joined a few Discord channels recently, in the past couple of years, and I've seen the Telegram groups, and I just can't keep up. There's like 15 channels. Everybody's talking left and right. The messages are coming so fast, and it's very overwhelming. However, the positive side I just want to throw in is if you have a passion for something, for example, you want to learn more about investing, you can do one of two things. You can go read every news article that comes out and be sold all the narratives of media. That's one way. Or you can find an influencer. So that's really YouTube driven for the most part. Go find an influencer that likes to talk about that particular topic and learn about their methodology. But one other way that I think he started his business in, Sammie, that was very successful, is he started a community to talk amongst friends around a certain subject, info share, share best practices in a trusting community environment. That is so powerful. And something that, if you have an interest in this, finding that community that you can be a part of, like Up the Gains. So if you like what you heard with Sammie, to join that community and hear and be able to communicate on an ongoing basis of different things that are going on and hear a community perspective, very powerful.